All right, let's go over crude and the ES. All right, so as far as the ES is concerned, there's a lot of sideways action that just wasn't that great because this sideways chop is very difficult to trade. So you have to, in this case, like what do you call trading the edges or the zones. You could do that, and but the moves are very small. And also, usually, if you have a sideways range, you have a lot of turning point trades, but this is just too much chop. Okay, so this is the demand area. It got tested here and led to a rally, and this is a demand zone that because of this volume, it got tested and gave a little move, but again, these are really crappy moves, so this is not really worth it. So I'll just show. So right now the high time frame is on sell, so you want to take sells, but the only trade that was available was the counter trend buy. So in this case, you just have to be really careful with the trade. The chances are it's not going to, it's not going to go to your profit target if you have a large profit target. Because counter trend, the way it works, so the cycle is like this. So you will have signals here that are green, and here that are red, and then here again that are green, and then right here that are red, and then here again that are green, and here again that are red. So as you can see, the amount of reward is big, and the amount of reward here is small. The amount of reward here is big, and amount of reward here is very small. So this is the thing with the counter trend. You will get signals and triggers because here the market is pulling back, so it will give you a signal to short, and then you have your longs, and then you have shorts, and you have longs, shorts. So that's why you just have to be extra vigilant. So this was the counter trend long, which a lot of times just goes to resistance, right? They just go down and just go to resistance with the shortest established. So it gave you the counter trend over here. The first thing to note is the effort. Like it's going down, right? But it gives you an effort. So that means they're not ready to break. All right, you're not ready to break. Now what happens? It rallies right here. It's because the effort is bag holding to go up, back to resistance. And then that offers a pullback to test right here and gives a very crappy move. The key here is when you get this break, right here, so the break above these highs, you have to know where to enter. So that's because you want the low risk entry to, if the trade doesn't work, you can break even. You know, if the trade doesn't go too far, you can get the max amount of profitability, but your entry has to be perfect. And that's the methods for that. So this is the minor accumulation block right here. The sideways action is the minor accumulation block. So I already know that, and I know that this is the breakout. So usually what happens in the after breakout is you have a pullback to test and then continuation. Now the most important thing for pullback traders is where do you enter on the pullback. So let's say no. So let's say you have this, you have some basing action, consolidation, the market goes up here. The first attempt might be here, right? But that only that only goes up this much. Then it goes all the way back to the demand zone here, and then it flies. So you don't know which tap is going to be. Now, why does it work here? Is because it's a breakout break. Why does it work here? Because somewhere in here you have an accumulation break. All right, so remember what I just said. Breakout break and accumulation break. Now, where's the breakout break? The breakout break is right here, the 31. Right? Where's the arrow? Okay, here. This is your breakout break. Breakout box. That's your breakout box, right? The X. Y at 31,000 contracts that break these highs. Where is your accumulation break? Your accumulation break is right here, where the effort is. That's the bag holding, and that's the accumulation. So what's going to happen is when they pull back, first they'll have to handle the breakout to see if there's going to be a reversal from that area and how far it's going to go. If it fails to take out resistance, they're going to go lower into the accumulation break and then try to rally. If they can't rally the accumulation break, they'll try to retest. If that can't work, it's going to take out the low. That's what happens, because it tried and tried at the key areas and it failed. So that means that if your accumulation guys are unable to hold, it's going to break. So now I'll show you this is the break, right? 31,000. So what do you think is going to happen? Where's the break? You have the rally right here, right? That's that green. This green is this rally. Now it's going to tap the accumulation area right there. Look, right there. It goes green, and it goes to where? Resistance. Can it take out resistance? No. All right. So as a pullback trader, you must know where the fuck price is going to go to test. If you don't know this because of, I don't know, you're 50% or 60% back, you're going to get in the wrong area and your risk and reward are all screwed up and you don't even know if it's going to work. So now you have to understand that, hey, look, it didn't take out this is the, what do you call it, the creek, the breakout of the creek right here on this, above this high. It tested it. It attempted to rally, but not enough juice, went and stopped at resistance. Now it's failing. Where is it going to go? Yes, it can retest this area, which is the breakout break, but the chances are it already went there. So is it going to spring it, or is it going to go lower? If it's going to go lower, it's going to test this. That's exactly what happened. It tested it right in there. It tested it, right? All right. So what do you know? When it tested this, it rallied. But these are crappy rallies. 32,000, 31,000, 26,000. Look at the little blue waves. That is telling you in your face, I am going to fail. Because the little waves are telling you that there's not enough buying activity. And that's one of the ways I know, get out of resistance, because they're not going to break through. It's 1, 2, they're not going to break through. All right, so now, as it goes to that area, to resistance, it already tested the breakout break, failed to make a new high, so it pulled back, hit the accumulation break, the bag holding, rallied, but weak rally, buyers are not going to break through. They're not going to break through. The sellers that emanated from this area won't let them. So now what's going to happen? Down and break. This accumulation is screwed. And you know what happened? When this accumulation broke, look at the volumes of the selling. These guys are out. they're out. They cannot lift price. So now this is a real issue, because we go to the higher time frame, it's going to break this low and it's going to go there. That's what I'm looking for, it to break this, because nothing here, all the way back. So that's going to be the trade that I'll be looking for. That's the trade. That is the trade. Alright, so I hope you learned something. I'm going to repeat. For a pullback buyer, you are looking for the pullback at the test of the breakout, as well as near the demand zone. There's going to be an accumulation area. You can find it with volume profile and probably time profile as well, the other one, right? So there's accumulation break, there's the breakout break. It's going to go there. As it rotates, it taps. If it cannot break through, and you know why it's not breaking through, because the original sellers that did the turn are still there. They'll sell again. So now it's going to come back to the accumulation area, and from there you have a chance at markup. From there you have a chance at markup. If it doesn't mark up from there, the market is that bullish formation is in big trouble, because it already tried here, doesn't, then it's fail, and down she goes. That's what happened here. Alright, the next thing is I wanted to take a look at was crude. This is important also, because crude had a sell right here, because it broke these lows. These lows are broken, right? Now again, here you had a sell. This was pressure to break crude, but crude is very strong market. I think it's still the market with the most relative strength, which means the likelihood of those sells working is questionable, and also because this could just be as I showed, the counter trend to set up the pullback from any one of these areas. This 29 was the 2900 area right here, the breakout 2900, test and go up here. Here it seems like it found some resistance because this volume is extremely high. So we just look for an entry. This was the area that they did a minor distribution right here on the overlapping bars here, and broke on high volume. But when it went lower than that, it just depleted. So this is what I'm saying, is that when you have the counter trend distribution, it typically sets up the pullback. It sets up the pullback for the longs to step in on the pullback and get the rally. So this is a very important point to understand, that the minor distribution that are counter trend are actually setting up pullback opportunities. In an uptrend, the minor distribution sets up the long pullback in an uptrend. In a downtrend, the minor accumulation sets up the short, the sell pullback, the pullback to sell and to make a lower low. So that's usually what happens. I mean, it happens all the time, and that's how the market is. They rotate up and down, And when it rallies, then it pulls back. That rotation to the pullback usually has some minor distribution. Here you go. Here's that break right here, very clear, 4,400 contracts. Comes back down. Where does it go? Oh, look, right here on the break right here, right? And that's where they come in, start buying. All right, that's all I have. Thank you. Have a good day.